and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, Indian stock markets seem to be getting increasingly worried about the aggressive interest rate hikes leading to recession fears in the developed world. And now we've seen the Sensex and the Nifty both slip to a fresh 52-week low as well. The Nifty Bank, the midcap indices have actually entered into a bear territory. That means they're down over 20% from their record levels. So how does one really cope with this kind of a stress of this sharp market correction? What are the 5 things that investors can do to ease this pain of the market crash? That's the focus of our show today. And joining in to share with us exactly how should investors deal with this in easy ways, I have with me somebody very, very special joining right in. Mr. Rahul Arora joins in. He's the CEO of Nirmal Bang. Welcome, Mr. Arora, and thank you so much for taking the time out for Business Today TV.
Thank you for having me on, Sakshi.
Rahul, we've seen that the Sensex is down about 4,000 odd points in a week. Now, that's a very sharp fall. What's next? That's the question that all the investors have on their mind. And how much low will the markets go from here?
So on a lighter note, Sakshi, we are students of the market and economics, not of astrology. So it's very hard to predict where it will stop or where it will go. But yeah, it's been a bit unnerving. There's no question. As you rightly pointed out, there's been a huge fall. The Nifty has fallen from almost 18,500 to 15,500 at today's low. Yeah. I think, Sakshi, the point is that a lot of investors came in for the first time into the markets during COVID. Yes. You had record demat accounts and it was all too easy for them, right? They saw a 7,500 Nifty go all the way to 18,500 without a single day of correction. Or well, the odd correction here or there, but it was pretty much a linear move from 7,500 to 18,500. Now, the point is that a lot of these new generation stocks, right, whether you talk about Paytm, Zomato, Policy Bazaar, Car Trade, a lot of these new generation stocks that would be predominantly loss-making and saw a lot of retail participation are not down in percentages. They're down to, a third or fourth or fifth of their values. And the only solace I take, Sakshi, is that you've not seen any significant mutual fund redemptions and the SIP numbers haven't come off in any material way. I'm a bit worried because you've fallen 3,000 points and there's still not been a reaction. So is this the calm before the storm? My sense is that patience is running out. I think we're hanging on to it by literally, a straw, so to speak. I think if the Nifty was to fall another 500,000 points, I don't know if that kind of holding power would be there. So it's a bit unnerving. I mean, we all know the reasons for why things are happening, but I think the fact that it's not converted to redemptions yet is probably the only silver lining I see at this point.
Exactly. And that's the question that we want to understand. Let's come to exactly what needs to be done by all the investors. So what should those first-time investors you just talked about who are enjoying this rally for the 1.5, 2 years time do now exactly?
So the mindset always is that मेरा stock वापस ऊपर चला जाएगा, ठीक है, थोड़ा गिर गया, ऊपर चला जाएगा. But I think prudence demands that you should always cut your losses if the losses are becoming excessive. So hypothetically, Sakshi, if you buy a stock for 100 rupees and it drops to about 80 rupees, I buy that argument that ठीक है, मेरा stock ऊपर चला जाएगा. But the minute it drops down to 60, 55, it's better to cut your losses and sort of move it to something else. Is my sense. And it's very tough to give advice to someone when they're going through a tough time, Sakshi, because what they do eventually is always going to be a function of what's in their mind, regardless of what financial investor, what anyone does for that matter. But if I was advising somebody who had no investments in the market, I would say that you can probably start buying now. I don't know how much lower this is going to go. But I think stocks, good quality, old generation stocks are down 50, 60, 70%. And I think it's a bit exacerbated. Yes, there is an inflation risk. Yes, there is a risk that interest rates are rising. But I don't think the damage is going to be that much. The stocks needed to be down 60, 70%. So I don't think we're in that zone where you need to be really panicky yet. I think you could average. Eventually, pre-pandemic, the Nifty was at 12.5, it went to 7.5 and it bounced back to 18.5. So it is a given that the Nifty is going to go to 20,000. Yeah. Whether it happens in 6 months, a year and a half is academic. But, as I say, it is only those people who invest in time, they will bear the fruits.
Yes, but is it the right time to enter the markets? For those who may be on the lookout to begin investing right now, is it the right time?
I would say if you had 100 rupees to invest, I would probably go in with 70%.
Okay,
I
but
would.
how about those? Okay, but how about those passive investors you were talking about? That so far we've not seen any redemptions. The SIP flows are quite strong. What about those? Their portfolios are also in the red. What do they do?
Silence kills, Sakshi. Sometimes you don't know what silence can do, and to that extent, I'm a bit puzzled by the retail investor behavior. To be very honest, I thought they would have started panicking by now, but full credit to them that they have not. I think if you look at the SIP numbers, they're still hovering in that 8,000-9,000 to about 11,000 crores per month. Now, whether these are linked to bank accounts and this is some disciplined form of investing and the coming of age of the Indian retail investor, I don't know.
Okay.
Only time will tell, because this is the first cycle that a lot of them will be seeing. Some have gone through multiple, but quite a few who have opened it up during the lockdown in terms of demand. This is the first time they'll be seeing this. Look, like I said, if you have 100 rupees, I'd go in and put 70. Look, there will always be pockets of the market that will be expensive at a 7,500 Nifty, and there'll be always pockets of the market that are cheap at 18.5. So I think you just have to find your niche, go in. Let's look at the positives, Saki. Just for for fun's sake, right? I mean, everything is so gloomy and doomy. As human beings, we are intuitively optimistic people. The monsoon prediction is all right.
Yes.
The RBI governor has said that inflation by the fourth quarter will be down by 200 basis points from the first quarter. Post monsoon, you're going to be 18 months away from a general election. I think government spending will pick up, which will probably result in more roads and things like that being made, so employment. And I think there is a case for bank credit growth to go up. There is a case for a second order impact on the FMCG company. So I don't think everything is lost, right? I mean, RRR just did 1,000 crores of business. Pushpa, KGF, Top Gun, they're all doing well. I mean, there is a part of the economy that's doing well. It's not all lost. The point I'm trying to make is
hotels are full. The aviation companies, despite all the losses of the ATF and price rises, everybody's traveling.
Absolutely. So I'll tell you, Sakshi, what's happened is I think the way people are consuming has changed post-COVID. I think it's, to quote the famous Karan Johar movie, I think it's Kal Ho Na Ho. I think people have realized pre-COVID it was about saving for a rainy day. I think today people want something. They want it. And I think you're seeing that in the age group of people in that, 15 to 25. I know so many of them that have an iPhone 13 today. Nobody wants to wait. I think COVID hit so close home. I'm sure you yourself know people who have passed away. And I think it just brought the concept of death so close to us that people said, we want to consume regardless of anything. Why save? I mean, save, but I think we're going through an Americanization of consumption, Sakshi. That entire phase where America went through a consumption boom, I think our youth today in that age group of 15 to 25, which is basically going to drive this country for the next 30, 40 years, is in that zone. They don't want to wait. And you're seeing that, right? I mean, think about it. You had COVID and you had the war. Ideally, our economy should have been in a far worse shape than it is, but it's not. So something is supporting it. And that's the positive news. So focus on the positives. I think sometimes your thought process becomes so linear that, oh, it's all bad. It's all bad. It's not all bad. Just the best investors in life make money when nobody's buying. You just need to have that courage of conviction.
Absolutely. But are those recession fears for real at all? I mean, like everybody's...
They're not, right? Actually, you yourself said you can't get we had family down from Delhi recently. We couldn't get a room in a hotel for them. We had to get them into a 3-star hotel because the 5 stars were sold out. Movies are doing well, flights are going full. I was just looking at some data. I don't know if it was a government authority published data or what, but the kind of outbound tourism Indians are seeing, the number of people going to Singapore, Dubai, etc. I mean, where is all this coming from? If there was a recession, would all this be happening? Oddly, not a single Hindi movie has done well in the last 6 months. It's all South Indian remakes and it's Hollywood movies. So I'm not saying that you're not going to go through a period of soft growth. You are. It is only natural. RBI has hiked rates by 90 basis points. Will probably hike by another 30, 40, 50 academic. So there is going to be a second and third order impact on GDP growth, and the third order impact will be on corporate earnings. No question. But are we going to fall off the cliff? I'll tell you, sometimes, you do things at a particular point in time and you bear the fruits at another point in time, right? So I think ever since Prime Minister Modi came in, he's been trying to, push this concept of indigenization of manufacturing, which he calls Atmanirbharta. I think with a lot of people having added capacity over the last 5-6 years, if your import dependence has gone down, the large part of your economy, which was not insulated back, say maybe 10 years back, is to some extent insulated today. So, it's all about what you want to take from the table when the food is served. I mean, you can't always cry and say that the sweet I want wasn't there. And there are sweets on the table. You just have to see it. I think there is, I mean, I personally believe that there's not too much to lose. You never buy the market, you buy stocks, right?
Yeah.
And I don't think there's too much to lose from here. I'd be very surprised.
So which are those sectors and stocks that you're finding sweet at this point in time? Where should investors, those who are still believing big time in the equities and still wanting to invest right now, where should they put their money?
So, Sakshi, like I said, I think, so one is, of course, this monsoon theme and, what happens as a result of it. I think the fact that a bulk of India today still is a rural driven economy and incomes are related to monsoons and allied sectors related to the monsoons. I think there is a good case for two-wheelers like Hero MotoCorp to do well. I think tractors and CVs could continue to do well, names like Ashok Leyland. Like I said, we're not too far away from a general election after the monsoons. I think infrastructure could do very well. And if you're laying roads and things like that, obviously you're going to need cement. So I think cement is a second order impact. Of course, the market got spooked post the Ultratech announcement of the capacity expansion. But I go back to the point, you buy good companies at times when things are not going right. And I think all of this may eventually feed into FMCG, is my sense, because you've had, I think, 3 or 4 years, at least 3 years of time and price correction in FMCG. Those stocks like Lever and Britannia, etc., haven't given you too much to take home with over the last few years. I think that's probably the last order impact. And I think it'll be important to see how it pans out. But if you have a good monsoon and government spending does pick up, I think there's a case in point to be made for FMCG coming back as well.
But Rahul, in terms of, say, asset allocation, where should one be investing now? Is it time at all to cut partially your equity holdings? Should one really partially exit, put money in, say, the traditional forms of investing in FDs, the other debt forms, even gold or real estate?
At times of uncertainty, I think cash is king. I don't think FD rates have reached the level where you need to exit or pull out from equities and put into FDs. Yes, interest rates are rising in India and FD rates will follow suit, no question. But is there a compelling case for you to exit equities and, I mean, whatever amounts of money you put in and pull out and put into FDs? I'm not entirely sure. Crude has had a good run. You're already at 120.25. So if you're invested at 75.80, you've probably made a lot of money. I'm not, or rather, we as a house are not in that camp that believes that it's probably going to head to 150. So I don't know how much incremental return. And a lot of the commodity prices actually that have gone up, whether it's wheat, sugar, whatever else, is basically because of supply disruptions of what's happening in Ukraine. And traditionally, if you look at any war that has happened, right from the Iranian crisis to the 70s or what happened in the Gulf in the 90s or other similar conflicts over the years, these things have a life, right? Whether it's 3 months, 6 months, eventually they come down. So I think a lot of the monies in commodities also have been made. I would think cash is king right now. I mean, if you don't want to be invested anywhere, see that the good part is you don't have to invest your money if you have it. Sometimes cash is not a bad thing to keep. Sometimes 0% return is better than -5, right? I would still be tempted to put it into equities, not because I derive my salary from there, but just because I think there's been a good correction and I think prices are attractive. India is growing, sectors will grow. And I think, like I said, it's a risk reward, right? So let me give you an example. So let's say a stock is worth 100 rupees today. In your mind, hypothetically, if you believe that stock is worth 150 rupees and that stock, say, hypothetically drops down to 80 rupees, right? So you have a 50 rupee upside and a 20 rupee downside. Would I take that trade? Of course. So it's just about where you are, how much your returns are, and what you expect out of it. I think equities is still a preferred asset class for me. But if not equities, then cash.
Okay, so one last question to you. From here, what could be the risk factors that could definitely pull down the index further by, say, 5-10% or worst case scenario? And, what positive triggers could pull the index higher? I mean, how do you really define that?
Just one data point, Sakshi, crude.
Okay.
I think crude at 150 is a bit of a death knell for our economy. There are multiple impacts. There is a fiscal deficit impact. a current account deficit impact, a rupee impact, a corporate earnings impact, an interest rate impact. There are multiple order impacts of crude going there, and all of these get reversed if crude goes back to 80. So I think today the RBI has hiked rates. I mean, as in not physically today, but up to today by 90 basis points. They may well hike by another 50. And I think if growth comes off in a material way, and growth will come off. Let's not kid ourselves. Growth will come off. These rate hikes have been quite substantial. But if growth comes off and inflation also comes off, who's to say by Diwali or early next year that the Reserve Bank doesn't start cutting rates? So I think crude is the single biggest determinant factor to me right now. I think crude at 150, oops. Crude at 80, wow. That's all I'd say.
Okay, well, on that note, thank you so much, Rahul, for being with us and sharing all these insights about markets, really helping all our viewers, many of whom are first-time investors, to really make sense of what's really happening in the equities, what should and how should they be really approaching their investments now. Thank you so much.
Pleasure. Thank you, Sakshi.
If you like the video, do like, comment, share and subscribe.